get you both Sapna and Yash on this. Lata is in the studio as well for a comment. Lata.
Well, in the first place, that stake that will be approved doesn't come as a surprise. What perhaps is the first point of detail we have got is that it will be 51%. But we still don't know whether it would be in tranches. We have yet to await more headlines from Sapna or from Yash. Or from LIC itself, or from the IDBI board. These are the only places from which we will know whether it will be first 40% and then 50%. One would assume that it will be issue of new shares. Even that is not very clear immediately, but the LIC board or the IDBI board need to tell us. At the moment, I think they have about 300 odd crore shares.
Via
308 crore shares. Okay.
Via preferential share route is what it says.
If it is the preferential share route, then very clearly it is going to be new shares. It's not a divestment. And that was on expected lines, because only then you will infuse capital. Otherwise, you will only end up giving money to the government of India. This is not a divestment process. This is an ability to get more capital into
And the
IDBI.
government had made it clear that we are not essentially receiving any proceeds of this,
yes,
but it will go to the bank. Yeah.
Exactly. So if it is 51%, then I would assume some 170 crore more shares will have to be given. At the moment, LIC owns about 11%, 10.82 to be precise, out of 308 crore shares. So they own about 30 crore shares. Another 170 crore shares perhaps would be given. No, I think even more than that, because it will have to be 51%. So perhaps you will have to expand the equity to about 500 crore shares and give about 200 crore shares to LIC, and only then you will have about 230 crore shares with LIC. So my sense is at least 200 crore more shares will have to be given, and the equity will have to be diluted to that extent. I believe Sapna is with us. Sapna, any details that you can share?
Yeah, so couple of takeaways, quick takeaways. The main highlight, of course, is that it's going to be up to 51%. The DA Secretary, Mr. Garg, has just told us that basically the LIC shareholding probably is around 7 to 8 odd percent right now. So keeping that in mind, up to 51% is what they'll be increasing their stake in one shot. That's number one.
Did he say how many shares will be issued, therefore? About 200 crore shares?
No, he did not say how many shares, and nor did he mention about the valuation in the sense
but,
the size of the...
Sapna, the most important point that you have dictated to the ticker team is that there won't be an open offer.
No. It's not that there won't be an open offer. Let me just clarify.
Sure.
Number one, up to 51%. Number two, it could be through the preferential share route. Number three, the money that LIC will, the money will be going to the to IDBI Bank. Basically, that's what the modus operandi is going to be. We asked him on the open offer, and he said that it may not be a big deal, simply because the public float is very limited in the bank right now. So obviously government is not going to participate. So he just said that this is not a very big deal. There can be an open offer. There cannot be an open offer.
Okay.
But if there is a requirement of an open offer, it's not going to be a big deal, simply because the public float is very limited, and obviously government is not going to participate in that open offer. Otherwise, there is no point in making the transaction.
He didn't refer to any Sebi requirement or anything?
Yes, no. He referred the Sebi requirement in terms of the valuation of the transaction size.
Sapna, so
the valuation, he said that we'll have to follow the Sebi guidelines on that, and he's also clarified. But naturally, the government nod will also be required in this.
So it's essentially not an opinion about the open offer, but basically a comment made that we may do it if it is required, or not if it is not. But it's not a big deal in either case. Yes.
Yeah. See, big deal in either case. He was trying to clarify that from the perspective that there is not much public float. So that's the point. Doesn't mean that it will not happen. What he was just trying to say was, even if it does happen and there's a requirement and they go ahead with that, it's not going to make a lot of material difference.
Okay,
that's the point he was trying to make.
There are a lot of traders who probably hopped onto the share only in anticipation of an open offer. So for that handful of traders, it's a big deal, because you saw the share running up to almost flat terrain and lose 5% when we put out the comment that there may not be. But please watch what Sapna is telling us. There may not be. It is not completely ruled out. As well, what Sapna is also telling us is that the price at which it will be done will be on the Sebi formula, because Sapna, if you remember, there was talk that they will demand a premium. Did you get any clarity on that?
Well, we could not ask that question. We are not able to come to that point. But earlier on, the sense I was given very clearly is that at least from the government side, there has been no demand. And if there is supposed to be a premium, obviously they will not do it at a discount.
Sapna,
again.
Yeah, Sapna, just catch your breath because I believe we have the DA Secretary's bite is with us, Mr. Garg. Just listen to what Mr. Garg had to say.
We are given to understand that the board approval the LIC has come through on the IDBI Bank deal. Could you just give us some main highlights?
LIC board today approved to acquire 51% shareholding in the IDBI Bank. They already have about 7.5%. So remaining they will acquire from the government.
So in one shot?
In one shot, most probably. Otherwise, the objective of getting 51%.
And through preference shares? I mean, IDBI Bank will be issuing the preference shares in favor
Most likely that would be the way. The IDBI Bank needs capital, so they would acquire, they would issue a preferential share. That should be the most one. The other one is that they can buy from the government, but that doesn't provide capital to IDBI Bank, and therefore that's the preferable mode to do it.
So the money will go to the bank, sir. The money will go to the bank. LIC's money will go to the bank.
Of course.
Yes.
That is what the new issue.
What is that quantum? Will the government sell some shares in the open offer?
No, open offer itself may or may not come about because public shareholding is very small.
Right.
It's only about
7 to
5%, right? And the pricing formula, etc., may not be very attractive. But they will go through that process. If necessary, they will make the open offer. But it's not very material issue in this context.
Right.
That's
So
why.
when can we, what is the amount that we are looking at, sir? What is the transaction size we are looking at, sir, tentatively?
What is the amount of
Sir, the amount that...
No amount need to be worked out right now. This would be as per the formula for the preferential shares which are issued. Right?
And so how can we go?
Time frame now. They go to the board and also seek the due approvals.
Sir, will carry by September?
cabinet approval be required?
The approval of the government would be definitely required.
Sir, IDBI Bank is likely to take it up tomorrow, sir?
Sorry, I think they are meeting, but I am not aware of that.
Thank you, sir. Thank you. Thank you. Thank you.
Well, it's quite clear that they're going to use the Sebi formula of preferential allotment to arrive at the pricing. So from the conversation, it didn't look like it's going to be at a premium because they said it will be as per the Sebi formula.
Towards the end of that bite on open offer, Lata, he said, and verbatim he said that, but we may also make an open offer if required. I mean, so
exactly.
his point was not whether the government is not saying or taking a stand that an open offer will come or not come. They're just saying that public float is very low. The Sebi formula will be used to do it. So it would not be a huge benefit to a large number of shareholders, which is a point that we also made.
No, I completely, I mean, I was wondering whom are you making the open offer for? Because if 200 crore more shares are offered over the base of 308 crore, you know, out of 500 crores, the current shareholding of the minority shareholders, non-government, non-LIC, is, you know, like 20 crore shares. So what is 20 crore shares in out of 500 crore? It will be about 5%. So genuinely, you know, the point is taken, but it looks like it is not with Sebi approval that he is saying. If needed, we would. That seems to be the point. But I think we have some guests with us. We could maybe get the opinion of people who have seen public offers in their time. Mr. J.N. Gupta is with us. There's also Mr. R. Gopalan, the former Finance Secretary, and Mr. R.K. Nair, former Irdai member. Mr. Gupta, my first question to you is, what will the Sebi stands on open offer? What does the rule say?
See, if you go to the FPCL and ONGC transaction, there was no open offer for the simple reason because takeover code provides that if there is a common owner, that is promoters are the same, and if equity moves from one promoter to another promoter, there is no open offer, regardless whether it is public sector or private sector. So under that guide, there was no open offer because the equity of HPCL went to ONGC and both were company with by the same person.
So, but here LIC will be regarded as government? Will it be regarded as interstate?
That is where we say there is a question of how do you deal with. At times we view LIC as a government, sometimes we say LIC is not a government. Now that is the million-dollar question that we have. If the SIB feels that LIC is not government, unlike ONGC and HPCL deal, the second question is, here it is not a transfer. Here it is an acquisition by issue of preferential shares, preferential offer.
Yes.
In that case, that clause will not be applicable because it is not a transfer from one government body to another government body. That's why it will trigger a takeover code. Now, the takeover code, I was listening that whether it benefits the shareholder or not, whether the price is accepted or not, it is immaterial for the Sebi. If the law kicks in, then Sebi will ask the open offer to be made.
Okay, so we have you on a scratchy line, but the long and the short of it is under current rules, you expect Sebi will have to ask for an open offer.
Yeah.
Okay, we'll try and redial to you and set that line straight. Let's get Mr. R.K. Nair and R. Gopalan into the conversation. Mr. Nair, what is your sense now that LIC board has given the go-ahead? As a former Irdai member, what are your first thoughts?
Yeah, I think board has only given the strategic intent, Hello?
Yes, go ahead, sir.
Yeah, the board has approved the strategic intent of the LIC in investing this money into the IDBI Bank at 51%, but we do not know the other terms, like what are the, divestment norms, because from what I heard earlier, they said that they have to divest this within 5 or 7 years. That is not yet known. So the regulatory approval is there. It was earlier 15%, now it is 51%. So the deal becomes, if they go ahead and buy it, it meets the IRDA.
This condition that you have to divest in 5 or 7 years will come from whom? Clearly, from Irdai, we never heard anything like that. You suspect it will come from RBI?
No, this I don't know, because this is what I read in the paper reports. Okay. So that I don't know whether they will. Mostly it will be Irdai, because the Irdai regulation talks about the total investments in the banks,
yes.
Individual banks, and the sector-wise norms are also there. So that it would be clearly to get out of the concentration risks, yes, which can affect the policyholders in the long run.
Okay. Okay, Mr. Gopalan, we have spoken earlier and you were a little shocked or unhappy that policyholders' money is being used to repair a broken bank. Now LIC itself LIC board has also agreed. Your thoughts? Looks like a done deal now.
It's a done deal. With all whatever doubts I expressed, now the deal has been done. Now we need to look at how to make it a success. That's what one should do.
Okay.
There are a lot of things which have to be done. The board has to have people with expertise to advise, to have corporate governance, separation of MD and chairman, and the MD to have a longer term, systems to be put for effective control of the thing, of the entire operation, HR beefing up so that real professional talent comes into the bank at market rates. Then the two things which I would like to LIC to also look at is to look at its banking sector exposure and see how they can get down this exposure in respect of other banks. Then LIC should also now look at many of the assets which it has invested, many of the illiquid assets which are there. Now, how significantly they are going to affect their financial stability and try and see how they can dispose of. Lastly, RBI as a regulator has an extra role now because of financial stability issues.
Yes. Actually, that is an interesting dichotomy. RBI as banking regulator should be happy that policyholders' money is being put on the line to save depositors' money. But as a financial safety regulator, it should be unhappy. Is that your point?
Absolutely.
Okay.
Absolutely.
Would you expect, therefore, RBI to come with some rules on this investment, asking... The other point that perhaps one of the regulators have to take charge is that LIC, while owning one bank to the extent of 51%, also owns a whole host of other banks. And will that be a matter of conflict? In whose...
No. It isn't. Owning means, are they owning this amount of shares? No. They may be having 10-15% of shares in banks.
15, sir, almost.
15, yeah. Okay. But not more than that. So we can't call them owning banks. But in any case, RBI will have to, if Irdai does not, RBI in any case will have to prescribe some whittling down of this holding of LIC in the IDBI Bank over a period of time. that will be worked out depending on the assumed operational performance of IDBI and how much of profit can be divested for this particular purpose, consistent with the reserve requirements and those kind of things. That can be worked out by RBI as a regulator.
You mean RBI should insist on the money up front? Is that what you're saying?
No, on the upfront money insisting for the capitalization by preferential, that should be insisted upon. That should be insisted upon because the capital requirement of IDBI is very important now. It has not to have the CAR of tier 1, tier 2, all the things have to be maintained. They are now gone down even on tier 1. So beefing up to tier 1, making it little better than what the minimum of 9% or whatever, to make it even better. And tier 2 also. So those things are very important from the bank's stability viewpoint. And therefore RBI will insist on, in my view, should insist on getting the entire money in one go.
Okay, fair enough. One more question to Mr. R.K. Nair. Mr. Nair, would you, we've got two kinds of opinion. One set of opinion saying that, it's a 30 lakh crore entity. What is 10,000 crores and why are we crying that, this is misinvestment of, pensioners' money or policyholders' money? And there is another set of opinions which say that if LIC wants to wisely invest policyholders' money, they should be buying good banks. They should not be doing public service or what should actually have been done by the fisc. Which camp are you in?
Actually, the fact is that now the one debate on both sides, whether it is a good thing or a bad thing, or but then now it is a done deal, and the LIC has decided to invest. As they have done in the past, they did that in Corporation Bank, and over a period of time, that stake has been diluted, if I'm not mistaken, to below 15%.
Yes.
So one thing is, to bring stability to the bank. LIC would be a good long-term investor. We have seen them in the markets when the financial crisis happened.
Yes.
It was LIC which actually invested in a lot of banks and the complete financial system. They stabilize it. So the kind of money they have is really long term, and it would be coming out of the life fund, not the pension fund as you alluded. So it will be coming from the life fund, and that will I think recently the norms have been changed. So they say it should be dividend-paying bank to be approved investment. So it will be coming most probably from the other than approved category of the LIC investment because they have not paid dividend, I think, last year.
They were loss-making. They have not paid.
So loss-making and not dividend-paying. So it would probably come from the other than approved investment category of the life fund, which is a very large fund. And as you rightly said, it may not make too much of a difference to the balance sheet of LIC. And they could perhaps wait and, as Mr. Gopalan mentioned, ensure that there's proper professional management in the bank. And we have seen IDBI Bank turn around sometime in 2001 or 2 when I think there was a chairman who was posted who managed to actually, transfer a lot of the
Yes, Mr. Damodaran was there. That's right.
Yeah, he was there and he, did that in a very, in a manner in which it was not very disruptive.
Yes.
So clearly a lot depends on the kind of leadership they bring at the top, the kind of chairman they have and the kind of managing director. Already they have posted a very good person there. I think with a good management team and with the kind of brand they have, I think it should not be difficult to
point taken, sir. At that time, Mr. Damodaran also got a lot of help from the government in terms of being able to put the difficult securities in a stressed asset fund. But of course, to be fair, Prashant, with this change from government to LIC, the government's intention to definitely privatize or sell it off to maybe an IFC or get other investors, reduce government stake below 51 clearly becomes evident. So definitely it makes it easier now to pass on LIC, pass on IDBI from LIC's hands to other hands. It would be much more difficult to pass it from government to non-government hands. From LIC to non-government to private entities, it is easier. That point is taken. Mr. Tulsian is also with us. Mr. Tulsian, your thoughts? Definitely it's a preferential offer from what Mr. Garg said, and it is 51%, so probably some 200 crore more shares, new shares, would most likely be issued to LIC. There was some ambiguity on open offer. You heard the DEA secretary. Your thoughts?
See, Lata, firstly, this preferential offer was very much expected because we all know that the bank needs fund and it won't be sale by the government, to the IDBI. So that was known, number one. Number two, good to know that LIC will now eventually be holding 51% stake, and I have been hearing that. Now, if you really take a call that if you see the broad contours, maybe 35,000, 36,000 crore market cap of eventually of the enlarged capital, and if LIC is holding maybe on a relative basis, one may argue that it is 51%. But if you see the absolute number, they are already holding the more than that stake in Axis Bank by virtue of their 15% stake, sub 15% stake, which is valued at about 20,000 crores. So I don't think that, I have always said that I don't see any problem in seeing LIC acquiring the stake, and I agree with your analysis which you have been saying. In fact, this will be a migration from the LIC to the private sector eventually, because even no regulators will allow them to hold it beyond a certain time frame which they ultimately LIC has to spell out. So I think this is a good move, and I don't see any reason now for this one. But coming on the open offer, I don't know whether this will really be setting a good precedent, that because the float is low, eventually maybe the government will hold, if I take up the enhanced equity, maybe government will hold about 40-45%, 51%, because right now if you take combined holding of both the LIC and government, it is about 92%, and if the enlarged equity, it may be about 93, 94, or maybe 95%. So whether this will be a right precedent in saying, because the float is about 5-6%, one should escape the open offer. And second point I just want to add here, because if you know that August 2018 is seen to be the approaching deadline for for all the companies to bring down their stake to 75% as well. Yep. And as such, the government, that is PSUs, because there are many PSUs who are holding 90%, 89%, and the absolute amount which government needs to divest is about 32,000 crore. So maybe if I presume that this will also probably comply here, but this precedent may not go well with the market. I don't know about Sebi, what will be the view of the Sebi, whether the exemption will be given or not. But if the open offer doesn't come, then the sweetener will go away. I don't think the share can rule above 50 rupees. But if you are a long-term investor and if you are taking a prudent call of LIC coming in, that's probably the right way. Just to give an example, take for instance LIC Housing. Yeah. That company has been doing quite well. If somebody, if they wants to divest their stake, they can definitely, fetch a much better price than what the share price is now ruling at. So let's hope that maybe in the couple of years, eventually, LIC may be able to turn around the IDBI. I'm not worried for the gross NP of 26-27%, because that will come down as such maybe to sub 20% in the next 6 months by virtue of the NCLT settlements and all those sort of things. So all these things are looking up, blotted up now, but I think in the next 6 months things will change substantially. But if open offer doesn't come, I think that will be an unusual precedent we're getting set in, and that will add, that will take away the sweetener of maybe 5, 6, 7, 8 rupees from the share price.
Okay. Well, thank you very much, Mr. Tulsian, Mr. Gopalan, Mr. R.K. Nair, and Mr. J.N. Gupta.